All right, stock market analysis and projections on the S&P 500. Please do read this slide. It gives you a good idea of our approach to analysis and what's important to you about applying it to your own trading and investing. All right, stock market, S&P 500. We're going to look at the weekly SPX, and we're going to look at some daily charts, which you can see the reversals that occurred on the indexes. Now, while the stock market is recovering here on Friday very significantly, in fact, it's recovered some 3/4 of what it lost on Thursday from its peak, the decline off of those levels we deem as important and likely to be telling us that somewhere around these levels is some resistance that we'll see in the market. So let's take a look as we switch over to the SPX, and this is SPX, and I'm looking at 4 harmonic families here in cycle analysis, and you get an idea of what that looks like right in here. You can see the important low there and an important low here, and this is that harmonic family right over there with a minor cycle and a minor cycle. You can see right in here the minor cycles that make up the dominant cycles. There are 2 of them in each. This one right over here barely perceptible because the market was so incredibly strong and rising again. I also want you to note that momentum has been positive, and it turned positive way back over here in March of this year and has remained positive, as you can see, by our Reversal Scout. Reversal Scout is a level 4 study that you get to put on the Thinkorswim platform. So very important to have a good handle on the momentum conditions. Now, what's really important now, and in the beginning of the show, I commented that valuations were very high and that it's important to understand that there may only be, for investors, a few percentage points available on the upside versus some significant risk. So in cycle analysis, we do our projections not only in price, but in time. And that's what's so valuable about this style of analysis. If you go back over here and look at this yellow zone, this is the period of risk where both cycles are coming down. And you can see in here our projection was that the period of risk, the period that it was likely to be declining in these declining phases, was between January and March. And it fell right over here and made its low around mid-March. So that was pretty spot on. Here, the period of risk was mid-September through October. So we believed it would decline from somewhere mid-September, and it actually fell from late August through October, and it made its low right over here October 10th, the week of October 10th. You could see the quality of that also. Here, the period of risk was January through April. So it made its peak over here in January. It declined over here through mid-March, and that was pretty spot on. You could see that these periods bring you very sizable declines in there when both of these cycles are in corrective mode. That's what happens. So now where are we? Well, the period of risk in here is suggested to be August through October. I think it's early October. And here we are still moving to the upside, as you can see, with only some minimal sense of a decline of a peak actually starting with some of the volatility that came in Thursday. And I'll show that to you. What we have been projecting was a peak in this market sometime in mid-August. Either it gets up to here to 4665 or it stalls in this area right now around 4600. Those are the areas of the fib extensions that come from the daily charts and create a zone of resistance right in here. So while the market may still do better through the end of the year as we have it projected up here into November, December, this period of risk is significant. Now, we don't know if it's going to just come down modestly and get down here to 4420, if it's going to come down kind of an average amount and get down to 4300, which would be about 300 points, which would be actually less than this one here, which was under a bullish condition. Or get down over here to 4208 approximately. So those levels right over there are 4220, 4300, and 4210, let's just say. right there. These supports in here are important levels, and that's what we look at for the correction. You can see in here it got down to the support level right in there. These were negative cycles, so they did much, much worse, and this is a positive cycle, so we're only anticipating a decline of, let's say, 300, 350 points, which would be pretty normal, and that would be maybe 7%, 6, 7, 8%, something like that during that period, and then moving up again. So the period of risk in here is important to be very conscious of, and add that to the market likely to, at some point in here, begin to discount a recession coming out there, as we showed you the extreme conditions at the beginning of the show. If you scrolled forward, or you're only watching a clip of the show and you did not see the chart that I showed in the opening comments, go back and look at it. It shows you the for the last 60 years, the inverted yield curve situation and the extreme we're at right now, and the very, very high likelihood of a recession coming. I think it's important to look at that. So many of you have not watched the beginning of the show. I encourage you to go back and watch that now. Let's take a look now as we switch over to the daily charts. And I'm going to look at the daily chart right in here. So what we have in here is what I'm pointing at right here is this harmonic cycle right in here. These and these cycles here. These point to troughs that come late September, early October. What that says to me is that, well, we started a little pullback in here. Maybe we've seen it all, I'm not sure, but there's a probability that this comes down again and gets back down into the slim ribbon and then begins to move up again. And then we're looking for that peak somewhere out over here in the second to third week of August, right there, and then beginning to move down pretty significantly. This engulfing pattern is important. It gets up right to that fib extension level right over there, and tells us that the market is susceptible right now. But the S&P is now up 50 points on Friday. Well, you would say the buyers are pretty solid, and the market momentum is very solid. I showed you the weekly market momentum. Here's the daily, and you could see the slim ribbon PO with these upside resumptions that you can see right over here, and we're getting that upside resumption there. So this level right over here of 45 and a quarter may be the worst level we see right over here now, and then it moves up again into this August period. Again, looking for somewhere between 4,600 to 4,665 as the likely peaking area on the weekly chart. And this area of risk, you could see, is only minimal. When you're in a bullish condition, that only moves down for a few days, as you could see, 4 or 5 days, as you had here and here and here, and probably here. We'll probably get some pullback early in the week, next week, if not 4 or later here on Friday. And then again trying to move up again. Again, this peak shows us up here in the period of the second to third week of August. Now that is in alignment with the VIX. The VIX is showing us a trough coming in the same time frame, and it says to us that implied volatilities will bottom sometime in mid-August, and then probably see much higher implied volatilities. We're looking for 25, 30 potentially in the VIX coming up in that September to early October period. So that's when that big risk is. Let's take a look at the NASDAQ on this daily chart, and you can see that right in here, and got a little extra line right there. And what this is the same thing. So there was a pretty good reversal that we saw right in there. And the reason the reversals are green in here, for those of you that are not familiar with our charting, is that as long as the slim ribbon is positive and the slim ribbon PO is green, then it will color these in white and green, because it tells us that the conditions in momentum is positive. Again, this is a level 4 the slim ribbon PO, and the slim ribbon with this programming is free for the Thinkorswim platform. So you can get that by going to our website and then download it on your TOS platform. So that gives you a great sense of that. Also, the slim ribbon is on Tasty Trade, so you can put that up on the Tasty Trade charts also. So that's a look at the NASDAQ again. We're looking for a little bit more pullback in here and then moving up again sometime into that mid-August period and then coming down again. This cycle right over here on the NASDAQ is pointing to sometime around mid-September for that low, and versus a little bit later on the S&P 500. But still, you get the same idea. The risk out there is mid-August to mid-September or early October for the market to have more of a setback. Let's take a look at the Russell RUT. This is interesting. RV encouraged me to put the mid cap on here because it's so reflective of what has happened on the small caps. And you can see these green, the green overlay in here is the S&P mid cap with cycles of 58 and 29 on the minor. So you can see a great reflection of how the cyclical patterns are working, both looking at the small cap Russell and the mid cap S&P 500. And what that points to, looking right over here, is that comes out to late September. So the correction we're looking at in the Russell coming out to mid-September to late September. Also, there's a possible left-hand translation when you look at this. What a left-hand translation is that that the peak of this cycle that we're looking at right over here may have already come on this reversal pattern. If this if this comes up above this level, then we'll know that it's not a left-hand translation, that it's just there's an upper track that belongs in here. And I'll put it back if that's the case. But right now, this is a warning. You see the evening star right over here and the reversal pattern right in here, making a double top. Even though it's come back here, it still doesn't tell me anything other than this area right in here is some resistance showing up, and you can see the cycle peak from the weekly chart right there. That is this area of resistance. It got up into the target zone and is finding resistance. So with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, roughly 10 days or 2 weeks spent in this with 2 reversal signals, it says to me that the Russell is probably done going up. So I took out the upper track and put in that note that it's a possible left-hand translation until it proves me otherwise. Also important is pay attention now to this mid-cap right over there. You could see the minor mid-cap right there and the dominant right there. That would be in alignment with some pullback in here, one more rally out into August, and then moving to the downside again. So that's a look at the charts here. Now, don't go away, because I want to show you our ranking system. Because if we're in an area of peaking, well, the stocks that are bearish probably are going to go down, but the stocks that are overbought, very overbought, probably don't have much upside potential in them. This is our ranking system of our 84 best traded, widely held, and ETFs in here. What I want to do is click on the OBI right there. And then when I look at the OBI, I'm going to look for stocks that are, first of all, bearish, as you can see right over here. AMD, Disney, XBI, of course, the dollar, the US dollar Canadian, which we've been bearish on, and the US dollar JPY, which we've been bearish on. We're looking at the OBI specifically. But what I want to do is scroll down here to where they are orange. And what the OBI orange is a short-term extreme overbought condition. And these are stocks that have been moving up. And you can see in here, looking at our overall very positive conditions in the Boeing and the FCX. The market outlook, it shows you what they are: potential downside short-term corrections in positive intermediate conditions. Why does it say that? It says that because this is all positive, but the OBI is giving you an extreme warning. What are those extreme warnings we see in Boeing, FCX, Goldman Sachs, Home Depot, JP Morgan, Morgan Stanley, as you can see right there? And oil is on there, gasoline is on there as they've been moving up, and heating oil right there, likely to get some minor pullbacks. The ones that are all straight green across are the ones that are likely going to be buying opportunities when they pull back, and the other ones maybe not so much. But most of these are pretty bullish, except for the long term, and giving you some sense that when they are orange, the market outlook for the next 3 to 6 weeks is telling you potential short-term downside corrections in overall positive intermediate conditions. This is fantastic. This, by the way, is available to level 3 and level 4 members, and I think it's just packed with important information. Again, you can scroll on there. You want to look at what the long-term positive or negative are. You can see that right there. Intermediate term positive or negative, as you can see right there, or the short-term positive or negative there, and of course the OBI. So you can scroll on all of those, and of course our charts are on there in static version for our level 3 members. So level 3 and 4 members get this, and I don't really know how you can operate without it. I think it is fantastic. That's a look at the stock market, and just overall looking for some peaking in here and a pullback into September or potentially early October, and then probably a move up into the fourth quarter. That is it. I hope you loved what I presented to you. Please don't forget you can get our level 4 special right now for 35% off. Everything you see included on here. Please do click Learn More on the top of the askSlim.com front page, and you'll get all the information that you need there. And if you have any questions, write to Matt at askSlim.com.